Hey, if you're in your 50s and have found yourself feeling like the markets are always moving against you, you're not alone. But here's the good news. It doesn't have to be that way. I'm going to show you how to master one of the most powerful concepts in trading, market structure, in a way that works for you. And it only takes 90 days to become confident in these strategies. By the end of this video, you'll have practical, actionable steps to take high quality trades. So stick around and let's get into it. Before we dive into advanced strategies, let's start with the foundation, understanding trends and market phases. These are the building blocks of every successful trade. The market moves in three key phases: uptrends, downtrends, and consolidations. If you can read these phases, you can position yourself to enter trades at the perfect moment. In an uptrend, the market creates higher highs and higher lows. This signals strength, and it's your opportunity to ride the wave upwards. Downtrends, on the other hand, show the market making lower highs and lower lows, signaling weakness. Then we have consolidation. This is when price moves sideways and many traders get stuck. But with the right strategy, even consolidation can be an opportunity. Here's an example. Notice the series of higher highs here. This uptrend is a clear signal to look for buying opportunities. Now compare it with this downtrend on the same chart. You can see lower highs and lower lows, a perfect signal to start planning for your short trades. Now that you understand trends, let's talk about supply and demand, a crucial concept that forms the backbone of most successful trading strategies. Supply zones are areas where sellers overwhelm buyers, causing price to drop. Demand zones are where buyers overpower those sellers, pushing the price back up. Understanding these zones will help you identify high probability trade entries and exits. So how do you find these zones? Look for areas on the chart where price has reacted sharply and decisively, either shooting upwards from a demand zone or falling from a supply zone. Once you mark these out, you're setting up for the ideal trade setups. For example, take a look at this demand zone. Price touches this level and shoots upwards. This is where buyers are stepping in with the strength. On the other hand, here's a supply zone. Notice how price hits this level and drops quickly. This is where sellers are controlling the market. Now let's get into one of the most powerful signals in the market: reversals. A market structure reversal occurs when the market shifts from an uptrend to a downtrend or vice versa. This is where traders who can spot it early can capture major profits in the market, while others get, left behind. The key to spotting a reversal is identifying breaks in market structure. In an uptrend, the price forms higher highs and higher lows. But when price fails to make a new high and instead breaks a previous low, that's your clue that a reversal is forming. This often happens when price moves into a major supply demand zone. Here's an example. Price is in an uptrend, making higher highs and higher lows. Everything looks bullish, but then it fails to make a new high and breaks a previous low. It's here we're going to find price creating a new supply for price to return to, for traders to look for a potential entry from that supply. And that's how you can capture profit from a new downtrend. Let's move on to one of the most common opportunities in trading: breakouts. A breakout occurs when price breaks through a key supply or demand zone, signaling that a new trend may be starting. However, not every breakout will continue in that direction. Sometimes you'll encounter what we call a fake out, where price breaks a zone but quickly reverses, trapping traders. The trick to avoiding fake outs is waiting for confirmation. When price breaks a supply zone to the upside, don't rush in immediately to buy the market. If price breaks below a demand, avoid jumping in to sell too quickly. Wait for the retest of the zone or the structure. If it holds during the retest, that's your confirmation for the valid breakout. Here's an example. Price breaks through the supply zone, but instead of jumping in right away to buy this market, you wait. Price comes back to retest the previous area of supply and the previous structure break, and it holds, signaling to you that you can look to enter a buy trade. Compare that to this demand zone breakout where price breaks below and you wait for the retest. Once it holds, you're ready to sell. But in this other example, you can see a fake out where price quickly reverses, trapping traders who acted too soon. Sometimes the market doesn't trend, it consolidates. During consolidation, price moves sideways within a trading range, often bouncing between supply and demand zones. Many traders avoid these conditions, but if you know how to trade in a consolidation, or if you know how to prepare for the eventual breakout, there are opportunities. In consolidation, price often moves between clearly defined supply and demand zones. You can trade these bounces, buying at demand and selling at supply, or you can wait for the breakout and trade the new trend that follows. Here's an example of a consolidation phase. Price bounces between supply and demand multiple times. By trading these bounces, you can capture quick profits. Alternatively, you can wait for the breakout, like this one here, to capture a new trend as it begins. Now that we've covered the concepts with market structure, supply and demand zones, breakouts, and consolidations, let's put it all together in a simple trade setup you can start using today. Step 1, identify the trend, whether it's an uptrend, a downtrend, or a consolidation. Step number 2, mark out your supply and demand zones on your chart. Step number 3, wait for price to either break structure or previous area of supply demand to show that continuation. Step number 4, confirm the entry after the breakout for price to pull back into your supply or demand zone. Once you have this confirmation, you're ready to enter the trade. So here's a complete trade example. We're in a bullish uptrend. Price is making higher highs and higher lows. So we're looking to buy this market. Once we've seen price breaking through a previous area of supply or previous structure, we're looking for price then to come back to pull back to new demand, where you're looking for this demand to hold to look to enter your trade for a buy. If you're ready to take your trading to the next level and want to master these concepts in just 90 days, then I've got something special for you. My 90-day profit trading system is designed specifically for traders over 50, giving you step-by-step guidance, practical strategies, and lifetime community support to help you succeed. Click the link in the description or above now to learn more about how you can start building a profitable trading strategy today. I'll see you on the inside.